Happy Wednesday and welcome back to another Live with Real Estate Mindset and Mitch Wexler. And we have a lot to talk about today. Apparently, Jerome Powell has spoken some words, nothing new, just spoken some words. And the entire market has started crashing. Mortgage rates are plummeting, reversing the trajectory of last week. Very interesting. And gold, we have a brand new record high. So we got a lot to talk about, a lot going on. And before I continue, Mitch Wexler, good evening. I almost said morning because we're used to doing these in the morning. How are you, sir?
Well, okay, it's a good afternoon to most of us. And, gold is way up, all-time highs again. So it's gone up 10% in the last 5 days. So it's absolutely massive, the move that it's done. I've never seen anything like it. But that's being bought, obviously, by countries and sovereign wealth funds, et cetera. And the NASDAQ is cratering. So all these things are to be expected.
Yes, wanted to say good evening to a couple of people real quick, and then we'll go on and talk about the play-by-play. But Tom Scrogg, it was nice seeing you in the seminar, brother. I got some info to send to you. Bobcat, what's up? Dean, how are you? Les, it's more about price than it is payment, Les, but I like to see you, brother. I always like to see you. James, there's Sean and Wendy. I love you guys so much. Merlin's always putting stuff on here, always the date. Wally, I see you, Wally. I see you around YouTube. MR's got a good question. I'll get back to this question here in a minute. But just wanted to say good morning. Good morning, good evening to everyone. Let's get started. And I want to show you guys a little bit on what's going on in the market. And everything is going to be chaptered, starting with our first chapter now on our market update. Let's throw this up so they can see what's going on, Mitch. And let me switch cameras here for a second. Now you guys can see that the Dow, and we're going to listen to Jerome Powell. So I'm going to show you what happened. Then we're going to listen to Jerome Powell, and then Mitch is going to break down what he sees happening in the market. But the Dow did close down 891 points, S&P 154, NASDAQ down 644. Now, according to Market Watch, here's the play-by-play. Let me see the latest update, see if they got anything else here. Stocks end with back-to-back losses after Fed Powell warns about damage from federal reckless spending, inflation, overwhelming debt. I'm just kidding. It doesn't say any of that. And the lack of median household income, but it doesn't say that. It says damage from tariffs. Interesting. It goes on to say this. This is play-by-play. Powell's remarks were disappointing to anyone hoping for the Fed bailout. Remember, you guys, a Fed put means a Fed bailout. In other words, printing money to save more than likely the banks, right? So that's what that's saying there. It also says rally in treasuries pushes yields further into 1 week lows. Total whiplash with mortgage rates. Absolutely shocking. S&P 500 prone to plunge when Powell talks about waiting to cut rates. I mean, he's pretty much always said that, if I'm not mistaken. This is interesting. NVIDIA post biggest drop in the Dow, S&P 500 in afternoon trading. Not good for them. All three major stock indexes head for back-to-back losses in final hour of trading. Also not very good. Equal weight S&P 500 slides Wednesday afternoon, deepening April losses. Look at that trajectory there. I'm sure the 401ks and pensions are starting to feel this. Now, let me do a little bit more specific. Let me show you guys how we ended. Verification required. Oh my gosh. All right. So we ended gold up, by the way, but we also, here's the VIX right here. The VIX is up 9%. I wanted to show them gold. What's gold at right now? Do you know, Mitch?
3352.
3352. Okay, so gold is at 3,352. Oil's up about 2% at $62 a barrel. Now, we're going to listen to the Jerome Powell talk, and he's going to talk about his dual mandate. But I just wanted to remind you guys that according to the Federal Reserve Reform Act of 1977, he has 3 mandates. We hear the first 2 mandates about job promotion and price stability, but I wanted to remind you the central bank is responsible for the third one being moderate long-term interest rates. It's supposed to conduct monetary policy with all 3 goals in mind. So I just want to remind you that it's not dual. It's actually a tri-mandate. So let's pull up this first video. I'm going to put a timestamp on this video. If you guys can, let me know that the audio is okay. After the video plays, we'll get Mitch's thoughts. I can already tell you what he thinks about Jerome Powell. You guys won't be surprised on that. But again, you guys, if you can, let me know that the audio is okay. And please try to enjoy this video, although most of you will not. But this is what he said to crash the markets. Listen closely. It's nothing important.
Forward to our conversation, my conversation with Professor Rajan Raghu. But first, I'll briefly discuss the outlook for the economy and monetary policy. So, at the Fed, we are always focused on the dual mandate goals that Congress has given us: maximum employment and stable prices. Despite heightened uncertainty and downside risks, the U.S. economy is still in a solid position. The labor market is at or near maximum employment. Inflation has come down a great deal, but is still running a bit above our 2% objective. Turning briefly to the incoming data, we'll get the initial reading on first quarter GDP in a couple of weeks. The data we have in hand so far suggests that growth has slowed in the first quarter of this year from last year's solid pace. Despite strong motor vehicle sales, overall consumer spending appears to have grown modestly. In addition, strong imports during the first quarter, reflecting attempts by businesses to get ahead of potential tariffs, are expected to weigh on GDP growth. Surveys of households and businesses report a sharp decline in sentiment and elevated uncertainty about the outlook, largely reflecting trade policy concerns. Outside forecasts for the full year are coming down, and for the most part, point to continued slowing, but still positive growth. We are closely tracking incoming data as households and businesses continue to digest these developments. In the labor market, during the first 3 months of this year, non-farm payrolls grew by an average of 150,000 jobs per month. While job growth has slowed relative to last year, the combination of low layoffs and lower labor force growth has kept the unemployment rate in a low and stable range. Meanwhile, the ratio of job openings to unemployed job seekers has remained just above 1, near its pre-pandemic level. Wage growth has continued to moderate while still outpacing inflation. Overall, the labor market appears to be in solid condition and broadly in balance, and is not a significant source of inflationary pressure. As for our price stability mandate, inflation has significantly eased from its pandemic highs of mid-2022 without the kind of painful rise in unemployment that has frequently accompanied efforts to bring down high inflation. Progress on inflation continues at a gradual pace, and recent readings remain above our 2% objective. Estimates based on the most recent data from last week show that total headline PCE prices rose 2.3% over the 12 months ending in March, and that excluding the volatile food and energy categories, core prices rose 2.6%. Looking forward, the new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. These policies are still evolving, and their effects on the economy remain highly uncertain. As we learn more, we will continue to update our assessment. The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. Both survey and market-based measures of near-term inflation expectations have moved up significantly, with survey participants pointing to tariffs. Survey measures of longer-term inflation expectations, for the most part, appear to remain well anchored as well. Market-based break-evens continue to run close to 2%. So, as we gain a better understanding of the policy changes, we'll have a better sense of the implications for the economy and hence for monetary policy. Tariffs are highly likely to generate at least a temporary rise in inflation. The inflationary effects could also be more persistent. Avoiding that outcome will depend on the size of the effects, on how long it takes for them to pass through fully to prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to make certain that a one-time increase in the price level does not become an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. As that great Chicagoan Ferris Bueller once noted, life moves pretty fast. For the time being, we are well positioned to wait for greater clarity before considering any adjustments to our policy stance. We continue to analyze the incoming data, the evolving outlook, and the balance of risks. We understand that elevated levels of unemployment or inflation can be damaging and painful for communities, families, and businesses. We will continue to do everything we can to achieve our maximum employment and price stability goals. Thank
you. Okay. You guys, I just wanted to point out before I unleash Mitch here, which, by the way, you want to chain this man up? Good luck with that. It took 24,000 employees to come up with that speech. Remember, you guys, the Federal Reserve has roughly 24,000 employees. Also, Nikki and Matt, I appreciate you guys for thanking other people. I see you. Nikki, email me. You haven't emailed me yet. We had the wrong email. Nikki, email me for the moderator spot. Mitch Wexler, you have been following the market. Obviously, you heard what Mr. Powell has said, which is primarily lies. Can you go ahead and break down the market for mom and pop? Let us know, should we buy gold? Should we liquidate everything? Should we freak out right now? Or should we be cool, calm, and collective? What's going on in the market, sir?
Well, before we get into that, the comments that were coming through, okay, now people are beginning to think. Now we're making progress because the comments are dead on point. Matter of fact, I didn't see one that was out in left field. So
I have a lot of good ones.
Congratulations. Happy to have you. Thrilled. With regard to Powell, okay, the key words were higher inflation and slower growth. Higher inflation equals slower growth. Okay, this guy is the master of the obvious. It's like, okay, and to your point, Travis, yeah, 23,000 employees to come up with that nonsense. You've got nothing. You did nothing. And by the way, so if it's so damaging and you're fully aware that it's damaging to the economy, then why in the world did you promote it? That's the problem with the Federal Reserve. So everybody that's been watching these videos knows I'm no fan of the Federal Reserve. As far as I'm concerned, the door should be chained immediately because they will, if force is necessary, they will start printing money again. And even Travis and I were talking about that before the video. The reverse repo will skyrocket by trillions, and it can happen overnight. They literally can do it. They can bring back the amount of U.S. treasuries and cause that to balloon. And then eventually what you'll end up with is the Weimar Republic. You just simply shouldn't do it. You can't do it. But if I was betting, based on history, they're so damn stupid, they will do it. And that will collapse the market once and for all because there won't be any coming back from it. We're at the precipice. We're at the tipping point.
Mitch, I'm going to throw up a couple questions before we move on to our next segment, which is our mortgage update. Real quick, thank you for the support. I remember you clearly. Email me. You had data analyzing software you were creating, and I haven't heard from you in a long time. He was going to move to Houston, I believe, if I'm not mistaken. Let me know what happened. Hope everything's okay, and thank you for becoming a member. But also join the Empowerment Center and start taking those free courses. I got a couple things here. Here's a comment from Bob. Pretty cool comment. He's saying that they need to raise interest rates. Do you agree with that, Mitch, or disagree with that?
Actually, I agree with it. The problem is it depends which set of lenses you're looking through. So to maintain a strong dollar, you would need higher interest rates. You want a strong dollar. And I saw one of those comments asking, well, would a weak dollar cause things to go up? Yes, that's the problem. So because we're importing so much, if our dollars become weak globally, then our cost of purchasing would go up, which means our gross domestic product in reality would slow down because things are just that much more expensive over and above the inflation that the Fed has created. So we truly need a strong dollar as compared to the other currencies on the globe. And we've had a downdraft over the last couple of days to the point where the British pound, last I looked at it, was $1.32 US. I looked at it late last night. So if you believe that the British pound is worth $1.32, given the fact that their economy is in worse condition than our economy, their GDP, debt to GDP, is worse than ours. And yet, how can anybody explain the $1.32 to the US dollar, British pound to US dollar? So the point of the matter is there's an awful lot of problems that are out there. If anything was going to go down first, it would be the British economy because it's already down. So with regard to raising rates, yes, that would be the ideal situation, is to stop the spooky theater. But like I said, if I was betting, there's a high probability that Powell, when push comes to shove, he will be forced in his own mind. I think it's complete nonsense. Nobody's forcing the Federal Reserve to do anything. The Federal Reserve should go on vacation permanently and let the dollar look after the dollar, let the interest rates look after the interest rates. And then what really needs to be done, they need to start slashing the derivatives under the hood by the trillions at a crack. And it can be done, but it takes the political will.
Couple more. There's some really good stuff here. I got 2 comments from Living the Dream. Don't we all want to live the dream? As long as it's not a nightmare. But because that's what we're living. Living the Dream says this: they are crashing the economy on purpose. We discussed China potentially doing that to devalue their currency, to pay off their debts. Mitch, you know what? And I have a super chat. I'll get to the super chat next and we'll move on to the next segment. But do you believe that in some way, the parties responsible for the economy are crashing it on purpose?
One could think that for nefarious purposes. The problem is they're not that smart. And you just have to stand back and look at this overall situation, in that if you follow that logic through and they say, well, we're going to crash the economy, what would be there right now today to pick it up? Bitcoin is a shell. It has, the math is great, perfect. But the problem is it's a shell. It doesn't hold any assets. Gold, silver, oil, those are commodities that are not connected to Bitcoin or any other coin at this point. So if they were going to crash it for the purpose of saying, well, we're going to switch and get rid of the actual physical cash and go to a digital currency, the infrastructure isn't there to do it. So the net result would be absolute pandemonium. It would be bank runs. It would be civil war. It would be the real deal. So they're not that smart. They're smart enough to try and stay away from it and try and figure this out. But the bottom line is they can't, because they have printed so much money, is trillions. And that's what we spoke about in the prior video that we did today. And that's showing up in the mortgages that people have gotten themselves into that they cannot get out of, but for handing the keys back to the bank. So there's a lot of problems that are out there, but you have to put the blame where the blame is supposed to be, which is on the Federal Reserve for printing trillions of dollars to begin with, and through the central appraisal districts, which have committed fraud by overvaluation and overtaxation.
And I want to give you guys a little bit of a clue on the video he's talking about. We did a video earlier today on Airbnb, and I don't want to give you guys too many clues, but a little bit of a spoiler alert. There's 657,000 STRs up for sale right now, which accounts for minimum 53% of active inventory. So according to the numbers, and you guys will see this video, over half of active listings for homes are from short-term rental owners. Wrap your mind around that just for a second. Now, wanted to talk about the super chat. Thank you so much for the super chat. This is what he says. He's asking, what are the odds that Trump is assisting the Fed in the makeup strategy? What do you think about that, Mitch?
President Trump is no fan of the Federal Reserve, and he said it multiple times. I don't know that he's got the will to shut it down, and obviously Congress would have to do that. But when you understand the economic damage of where we are, like in 2007, just by virtue of the rule of 72, if you go back to 2007, where we are today is 2007 on steroids, magnified basically to the exponent of 4. That's how bad this debt is, because they printed on top of the prior debt from 2007. So let's call it 12 trillion of additional print over and above where we were back then, plus the required interest on top of that principal. So compound cumulative. Bottom line is, there's no math on this planet to get us, the United States, out of this mess. There is no math on the planet to get China out of the mess that it has created, because their central banks aren't so bright either, just like our central banks. They copy each other. Got the same problem with the IMF, got the same problem with the European Union. The tail end of the day, they've debted themselves into a position, and they have gone out and raised fraudulent bonds, which again can be unwound, but that takes political will, and it's going to take one hell of a tough conversation with some very interested parties to say we're going to wipe it out overnight to get rid of the derivatives. But if you don't do it, 2007 is going to look like a walk in the park.
Mitch, people are starting to get it, at least that are following us and watching us. I mean, the comment section, I mean, I can't even get to them, but they're so good. They're talking about Keynesian economics. So good here, you guys, talking about the QE asset bubble, which is QE is another name for fraud and debt bubble. We've been talking about that. Also, I didn't even give you a shout out. Thank you for the super chat, man. You have no idea how much that means to me. I became a full-time content creator and only a content creator, so all the support helps. To the Chickens. So it took me a minute to put that name together, but his name was To the Chickens. Okay, cool name. Thank you for the support. Let's move on to the mortgage update, Mitch. Now, let me do a timestamp for the mortgage update at 22 minutes. And I'm going to put it up on the screen here. You guys, your comments. I mean, geez, the comment section is absolute fire right now. So let's do the mortgage update. You guys know, obviously, from following along, or even if you haven't been following along, you should know that the 10-year treasury is kind of what's running hand in hand with residential mortgage rates. It's not the Federal Reserve. They control the federal funds rate, the short end, right? The overnight rate. This is the 10-year treasury, the longer end of the yield. And it's gone down. One of the last videos that we did, this was at 4.6. So it went down, and it went down on the news. You guys can see it kind of was sideways today, slightly down, and then it went up. But on the news, it's been plummeting down at almost 6 basis points, sitting at 4.28. I mean, this has been all over the place. 1 minute we were under 4, then we were at 4.6. Now we're at 4.28. It's all over the place. Let me show you guys the impact that this has had on mortgage rates. Again, it's really hard to keep up because it's all over the place. It's whipsawing essentially right now. But 30-year fixed rate mortgages for conventional is sitting at 6.86%. If you shop your mortgage correctly and you do a really good job, you guys should, and this is not financial advice, I'm just kind of giving you guys general information from my perspective and from what I've seen, you guys should be able to get a 0.5 point lower. Again, good credit, shopping your mortgage, you should get a 0.5 point lower on what you see here. But 6.86 conventional. You guys know that FHA has lower interest rates. FHA is sitting at 6.35. I mean, you guys remember the video we did when this was under 6? So as soon as we hit 5%, top 5%, it freaking completely reverses, skyrockets up. Now it's plummeting back down again, all over the place. Let me show you guys the impact on the interest rates on a loan amount of $200,000. Now today I'm doing an amortization schedule or a mortgage. Remember, a mortgage is an amortization schedule. Amortization schedules are front loaded with interest, meaning you make the bank rich before you pay off your debt. And I got to tell you guys, they love it when you refinance. They love it because you start all this over again and you will never pay your house off if you keep refinancing. Refinancing could seem like a good idea. Maybe you save $100 and you get $5,000 back. But I got to tell you guys, it is not. Okay, I got to be careful. Most of the time, it's not a good idea unless you shorten the term and it justifies the expenses. So shorten the term is good. But look at this, guys. At a 6.86, I'm only using 200,000. Okay, you would pay back to pay that loan of 200,000. You would pay back $472,000. I'm using the lower amount, so it makes more sense. Also, I want to show you again, it's front loaded with interest. Year one, you pay $13,600 in interest. But year number 30, you only pay $569 in interest. Again, because it's front loaded with interest. Now, I want to show you guys the impact of a one-time payment. Okay. I've talked to you guys a lot about this, but if I say I do get a tax return, or I've figured out how to save money and I want to pay my mortgage off early, I can make a one-time payment. I don't have to do biweekly if I don't want to. Biweekly is fine, which is just one extra payment a year. But if I have a $10,000 payment, okay, and I pay that when I close, so I pay it April 2025, let me show you the impact just $10,000 towards your principal actually has. If you put $10,000 down on that loan, after, right, you close on the house, so you have the loan now, you guys turn the loan from a 30-year loan to a 25-year loan and 10 months, while at the same time saving $56,888 in interest. Again, you guys, I'm telling you that because if you do have a mortgage and you have an amortization schedule, you don't want to be trapped in it. You want to figure out ways to pay down the principal so that you can get out from underneath your mortgage and not be trapped in it forever. Now, let me show you what else the market's doing. They're pricing in no rate cut in June. The last video, I think it was the very last live video Mitch and I did, I went to June, which is what you see here, and they weren't even considering no rate cut in June. They were saying, remember, I told you guys 100% rate cut according to CME. Look at how that's changed. So this just changed. It's now sitting at 28.8%. Our last live, this was at 0. It wasn't even listed on here. So the market is apparently starting to price these things in. And one of the reasons is because the 5-year break-even inflation rate is still elevated, although it has been going down. It's been plummeting. You guys see that right here. I'll show you reasons why here in a minute. But it's still high. It's still elevated, sitting at 2.31. You guys remember the Fed has told us their goal is 2%. And that means that they're only going to rob us of 2% of our income per year. Isn't that great of the Federal Reserve? How about we get some of that money back? But nevertheless, that is your mortgage update. I'm going to go back into this camera over here. We're going to listen to a video. But before I listen to that video, and I want to get some questions. So if you guys have any questions about the mortgage part of this video, ask your questions right now. Mitch, any comment on the mortgage update section and how important it is to pay off mortgages?
Not to the mortgage side of things, but there was a question about, quote, free market. And
okay,
I can address that. So I believe the question was, should there be, quote, a free market? You're hearing this term bandied about. There's really no such thing as a free market. It's a theory, but our problem here in the United States for 2024, give or take, our problem with the trade deficit was roughly $1 trillion. Well, in order to have a true free market, that would mean no customs duty, no import duty, no export duty, and a truly zero balance trade deficit. As far as I know, that hasn't occurred all the way back to the Great Depression. Because one country, regardless of who it is, it doesn't matter. It could be a small country. It could be something in the Caribbean. It doesn't matter. Somebody can simply say, well, if you're going to bring your goods in from the United States, we want to hit you with a tariff. So because we want to make money on our side, this country, call it the Cayman Islands, we want to make a little bit of money on the side. So they say, okay, fine, here's a 7% surcharge because you, the Americans, are selling your goods into our country. So the idea of having a free global trade, in truth, is necessary at this point. The problem is you've got idiot politicians standing in the way because they all think they can gig the system, and they've been getting away with it, and that's part of the problem. Our Fed not only prints trillions of dollars worth of debt, paper, chasing paper, not backed by assets. So they're not only printing it for the benefit of the US in their mind, but they're also printing it for the benefit of the rest of the globe. And that's part of the reason why we are the world's reserve currency. There's a cost associated with being the world's reserve currency. The problem is the fraud that has been induced into the system because the Federal Reserve has only existed for one purpose, which is to backstop the banks and never to backstop mom and pop. So it's a failed social construct from the word go. And that's where we are right now, in that this problem is magnifying And as I said, the cycles are getting closer and closer. So the sine wave is going up harder, it's coming down harder, and the cycles are getting closer. And that's what you're seeing play out in the market again today.
I muted myself. So I just got a text from Melody, right? Melody and I have been texting each other all day because I've been going into Airbnb, and I was like, look at what I found, Melody. She's like, oh my God. Mitch, I had a question for you. I removed it. Okay, yeah. Here it is on the bottom here. Good comment from Ultra Maga Latino. Let's go, man. Let's go. Fed is using the tariffs as a scapegoat.
100%.
Okay, that was easy. All right, I'm going to move on to a quick market update where we're going to look at some debt stuff. We're going to look at some stuff here and there. But first, we're going to listen to a video on industrial production being down. So industrial production came in down again. We had that happen a couple of times the last couple of years. So I want to go into that video. It's only a minute long, and then I'm going to go into some other recessionary stuff. Let me queue up this video. And if you guys can, let me know that the audio is okay. And then I will be right back.
Sales was a solid print. We're going to talk about that, but let's get industrial production with Rick Santelli, too. Hey, Rick.
Yes, and this is a March number. Industrial production is weak. Expecting the number down a couple of tenths. Well, we had it at 10, down 0.3%. That would equal where we were in October. To find a lower number, you're going towards September. And if you look at utilization rates, they dipped a bit from 77.9 expected, 77.8 is the number, and that is about 0.3 less than our last look. And, well, if you look at January, 77.7, you can see how we fit in between that and our last look at 78.2. Not a terrific number. Many thought that March industrial production might surge a bit more because of the announcement of auto tariffs. We still have business inventories, and that's going to be key coming up at the top of the hour. But before that, Squawk on the Street's going to take a very short break.
Interesting. I'm going to give you a quick market update now, and then I'm going to get back, and we'll get back to this comment here. But let me show you guys what we're working with and what I want to show you. Let me remove this comment, actually, so you guys can see this properly. So here we go right here for some deflation. So this is United States inflation rate month over month. We finally have a negative print. I actually saw this. I saw this on someone's channel this morning. I think it was Rebel Capitalist. I think it was from George. And it's like, I think it was, I'm not 100% sure. And I checked, and sure enough, down 0.1%. Isn't that great, guys? So now all we need is what, another 30% to go? So we got our 0.1. Congratulations. But we need a lot more to go. And the reason we need a lot more to go is because no one has been doing anything about it. And when I say about it, I'm talking about the inflation, of course. Let's go on, but that is a negative print you see right there on your screen. That's kind of recessionary, wouldn't you say? But let's keep going. This is also recessionary. This is GDP Now that has been updated as of today's date, still showing their latest estimate is putting Q1 GDP Now at negative 2.2%. That's two negative prints. Here's something that is not a negative print. Unfortunately, we wish it was. This is the national deficit. So this is the yearly debt. So we already have 37 trillion in deficit, not counting unfunded liabilities, which is freaking shocking how much is there. This is just what they spend on a yearly basis fiscally. So year over year, and the fiscal year starts in October. We're sitting at a deficit of 1.3 trillion. That's up 23% year over year. That is really, really bad stuff. Now, when we keep going, here's the US debt clock that also has Doge on here. Couple things I want to read to you guys. First one being how much Doge has apparently found in fraud. That's now sitting at 325 billion. According to the clock, we don't know for sure. Obviously, I don't have the numbers, but according to this clock, they've found 324 billion in fraud. Thank you. That's saving, according to them, per taxpayer, $2,800 per taxpayer. But I also wanted you guys to look at this. This is what they're not talking about. Mitch and I have been talking about this all the time. It's great they're removing spending fraud, but this that I'm circling is what they're not dealing with, and that is the current debt. The interest payment on our debt right now, just to service it, like all these treasuries and things you guys hear about, that's $1 trillion just in wasted money. It's just towards interest. 1 trillion in interest, circling that right here. Homelessness at about 707,000 Americans homeless. A lot of those are vets as well. 507,000 bankruptcies, 94,000 foreclosures, a lot of crazy stuff. They're saying 27 million people without insurance. I mean, insurance is an absolute fraud. Let's keep going, you guys. New record low. Okay, so we have a new record low. Not that it matters. This is all nonsense. I now know that. What you're looking at here is a form of quantitative easing or a form of bank bailout. It's called the overnight reverse repo market. It is a record low. So this is a record low from its blowing up, and that's only 54 billion. So we've never seen it this low. It's under triple digits. But the thing is, and Mitch will point this out, I'm sure later on here, but this will blow up with any form of money printing or quantitative easing. In fact, this may be the new sign of quantitative easing coming. So when this gets to zero, Mitch, maybe that's the trigger that pushes the Fed to print more money and to put millions of Americans, additional Americans, in the crosshairs of decade-long poverty. That's that chart right there. But that's only at 54 billion. Interesting. Now, another problem that I always like to think about is what would happen if we unwound all of the assets that the Fed owns. So this, what you guys are looking at is a $6.7 trillion in assets that the Federal Reserve has. And by assets, I mean what's mine and yours. So they own what's mine and yours, $6.7 trillion worth. That's crazy. And so we're going to listen to a video here shortly on China, because, apparently everyone is blaming this on tariffs in China, and nothing that I just showed the viewers matters, right? It's only these, nothing I showed the viewers had anything to do with tariffs, by the way. That will be our next video. But any comments on that, Mitch? Do you want to talk to the viewers about the reverse repo market having a new record low? Is that interesting to you? There's a new record low in the reverse repo market?
You actually did extremely well. And they just said you were just another pretty face. You actually nailed that one. Yeah.
Me? What are you talking? Wait, who said I'm just another pretty face? Who said that?
So here's the thing. Travis is right. If you look at that as an indicator, when it gets low, is all of a sudden when it bottoms out, that becomes the base. Then overnight, they literally can drop $1 trillion worth of US treasuries into that account and start making that circulate. So that is, in fact, like if you look at what's called the RSI, which is the relative strength index, and you put the RSI on that chart, Travis is 100% right. That is exactly what's going to happen. So I want to point something out with regard to that actually occurring. Well, if in fact we are in stagflation, which is inflation up, unemployment up, interest rates up, and then the derivatives that are associated with the reverse repo up. Well, that's a solution that is just absolutely horrific. It's not a solution, it's a nightmare, because stagflation is what occurred when Jimmy Carter was president. Just to give everybody some perspective, except our debt load now is probably 300 times greater than it was when Jimmy Carter was president. So you see the problem. Stagflation is going to become an absolute nightmare. And then the derivatives with regard to what's going on under the hood. So when Travis said, well, this is the reverse repo, it's 6.7 trillion is our money, except that nobody knows what those assets are, because under the reverse repo, the US Treasury, the US Federal Reserve can take incoming unmarked paper. So it's not mark-to-market paper. They'll call it an asset, but it's not an asset because it doesn't have a real mark-to-market value, and they'll substitute it for a US Treasury. So they hand that US Treasury over to the bank to put on the bank's balance sheet, so that the bank's balance sheet all of a sudden looks great, but it was the bank that handed the the Federal Reserve, the unmarked mark-to-market paper. In other words, nobody knows what the hell that value is because it's not balance sheet related and you can't track it backwards. Well, that's part of the Ponzi scheme that's happening, except that those derivatives are worth somewhere between 600 trillion and 800 trillion. Nobody knows the exact number because nobody's been able to track it all the way through. It needs AI in order to do it. But our US national debt, let's call it 36 trillion. Well, okay, look at the derivatives. The derivatives are 20 up. That's the problem. So by people just saying, okay, well, we're saving money from the government not spending the money, it misses the point. The overall point is, how are you going to reverse that debt clock? And the only way to do it is to start slashing trillions and just simply say you're not going to get it paid back. Those of you banks who participated in this paper, chasing paper, you're not going to get it back. And if that means you go bankrupt, c'est la vie, right? You took unilateral bets with other people's money and you lost. You deserve to be put out of business. And if the government doesn't get involved and fix this and start hacking away at trillions at a crack, this system will implode. That's just how the math works. Just a question of when, not if.
Very good. Very good. Still, I mean, these comments, I wish you could see the live comments, Mitch. You can only see the comments I'm throwing up on the screen. You can't even see the live comments. I don't know why you can't see that. But real quick, someone made some really personal comments real quick. And I got to acknowledge these because it's just the man in me. Never heard of anyone hunting sharks in the Gulf with a kayak. Brother Ray, I'm also, see, you're leaving a big part of that out, that I release them and I tag them and I take a DNA sample and I give the data back to the Heart Institute and Texas A&M for their migration studies. All right. I'm just saying. And yes, but Quint had a bigger boat. I'm using a kayak. And if you guys don't believe me, do you guys know what this, you want me to show you this? You know what this is? You know what this is right there? You see that? Okay. First place team. You see that? Okay. How many sharks did we catch? 576 sharks 1 year tagged. Anyways, 554. I love doing it. I'm getting a little bit old to do it because it takes an absolute beating on my body. But it is what it is. Thank you guys for noticing. Let's queue up our first video regarding China. Let's see what they have to say. It's a talking head video, so I'm not sure how it's going to go, or I'm sorry, how the viewers are going to like it much. It's going to catch us up onto what the market is saying is happening with the tariffs, the trade war, China, all that type of stuff. I'll queue it up right now. Put the timestamp in. Let me throw up in a full screen. Let me know that the audio is okay. And you guys keep commenting because, my God, there's some really smart people watching right now.
To these ongoing trade tensions. Joining us this morning, China Beige Book CEO Leland Miller's with us. Leland, always good to check in with you. Thanks for the time.
Happy to be here.
So are these sort of conditions that are supposedly being set, you think they're really laying the path to actual talks?
Well, there's not that much holding back either side from pushing for talks. It's all about respect and making sure the leaders don't look bad. That's very easy to massage. The question always has to be, what does the U.S. side want out of it? At first, China was one of many countries they're going after. The plan changed, and it was going to be a all-encompassing China strategy. If you're going into negotiations, what are you asking China for? Are you just asking them to buy more stuff to narrow the trade deficit? Is there a broader China competition program platform you're trying to push forward? I think the administration has to articulate this, and the problem is they've articulated every kind of option back and forth and haven't been very clear on what they actually want.
Right. You think they are narrowing the funnel, though, a little bit in these recent days?
Well, look, I mean, obviously, when you bring tariffs to the rest of the world down to 10% and China stays at 145, 120, 145%, then you're signaling that you're going to focus on China. On the other hand, if you continue to have angst from the bond market, you have worries about what's happening in the economy start to trickle through, then there are going to be some in the administration who are looking for an off-ramp and who want to try to figure out how you can move towards a situation where you can keep tariffs very high on China, but also get a bunch of goodies on the side. Again, I don't think they've agreed on what they want. Obviously, TikTok's is hovering around this conversation, fentanyl cooperation hovering around this conversation. But the problem is the U.S. government and this administration has not yet articulated what do we actually want the outcome of talks to look like. And then if we knew that, then we could look at the possibility of whether talks make sense or easier to jump into in the short term.
Yeah, it's a matter of, what exactly you're solving for here. There was also this Wall Street Journal headline about how the U.S. is planning to use tariff negotiations elsewhere in the world to essentially isolate China. How do you think that will be received, and how difficult do you think that tactic will be to actually effectuate?
I think the entire world was expecting it, but then we went and tariffed the world and then asked them for cooperation on China as sort of a secondary step. So I think the sequencing is off a bit. I don't think it's surprising at all that countries would expect us to come to the table and said, look, you're going to cooperate with us on trade, on transshipment, on technology, on investment, or else that there'll be a price to pay. I think that's just about every country in the world was ready to hear that message. Then the question was, do we care more about imbalances in Europe or imbalances in South America or imbalances in Southeast Asia than we do care about the broader China threat? to the United States economy. And so I think, again, this is a messaging issue. The administration has to make sure its messaging is clear when it's pushing forward, both to allies and also to China. What does it want going forward?
Meantime, Leland, what kind of lanes do you think open up for China in the interim? There's some headlines today about their envoy to Spain. We know that Xi visited Vietnam, signed a bunch of agreements. How much scope do they have to broaden their role around the world?
Well, China will try to take advantage of any opportunity they see to wedge into current relationships or to increase their leverage with U.S. allies and partners. But I think that the bigger, broader dynamic here is that the rest of the world doesn't want to be any more beholden to China than it is to anyone else, probably less so. So if you're in Southeast Asia, you might not like the tariffs that were announced, although they were immediately brought down. But you really don't like the idea of a big, powerful neighbor that's exerting its economic and military pressure on you. So yes, of course, Southeast Asian countries will have to talk to China, but I don't think that they want to get in bed with China. If you look at Europe, of course, is going to talk to China a little bit more, maybe to use as leverage against the United States. But at the same time, look what's happening to Europe's economy. The Chinese, if they're not going to be exporting a lot to the United States, all that overcapacity is going to shift even more towards Europe. They've got a big economic problem. So yes, China would like to be relevant in these conversations, but all these recipient countries are not going to be very happy to take the brunt end of the economic relationship.
Do you think, and we talked about this a lot this morning, whether it's rare earths or the potential to weaponize their treasury hoard, do you think those are cards they'll actively play?
Well, they will on the critical minerals. They're already doing it. These have been gradual steps, and I don't think that they've been diligently enforced. But they already are signaling that from the supply chain standpoint, they do have leverage over the United States and other Western countries, and they are willing to threaten it and potentially use it. When you're talking about treasuries, you're talking about something much more serious, because it's not just about China, selling treasuries into the market. It has huge forex reserves, and it has to invest them in something. So certainly on the margins, it's going to be trying to look like and signal that it has other options. But the Chinese financial system can't simply divorce itself from the U.S. dollar. It is built on top of the U.S. dollar system, and therefore needs the U.S. dollar to continue. So when you get to some of these financial things that are being talked about, that is a much more aggressive step than they're willing to play at this early juncture.
Right. Yeah, we're not talking about that by any means at the moment. Leland, complicated, but easier to understand with your help. Thank you, as always, Leland.
All right, guys, let's get back here real quick. Now, there was a little bit of confusion. I want to get your interpretation of that, Mitch, but there's also a little bit of confusion on what a kayak is and what I do in my kayak. I saw your guys' comments. Okay, it's not a canoe. You go out in the ocean with a canoe, you're going to get destroyed. And also, it's a super special, tiny little boat, right? Something you got to paddle on, and you got to fight through the ocean waves. If you guys think you could do what I'm talking about here, go take a kayak to the beach. Actually, don't do it because you'll get hurt. I'm just saying, it's freaking really fun, though, if you want to do it. I love it so much. Kayaking through the ocean waves, right? They're smashing you. You got to get through it. And someone's like, don't flip. I've flipped many times out there. It's super scary. All right. You got to have the upper body strength to flip that sucker back in. And you better get back into that kayak as soon as possible. You got bloody bait in the back of it. Mitch, all of that to say, what was your interpretation of that video?
I find the conversation rather tertiary with regard to their back and forth comments, because it is really the masters of the obvious. I don't know what the White House is doing. I don't know what the strategy is. I'm not sure that anybody does. I know for a fact the Federal Reserve hasn't got a clue. But here's my interpretation of this. Right now, as has been since Bretton Woods, the U.S. has the reserve currency of the globe. I've read the reports of what China is working on by tying their debt, China and Russia and Brazil, by tying their debt to what's called a unit. The unit would be a unit of gold to be determined based on what our U.S. government does in terms of the price of gold. So basically, the U.S. will do the heavy lifting for the unit belonging to China and Russia. That's their theory. I've read the document. Their theory is actually very smart. So whether there should be one currency or two currencies is yet to be determined. But here's the bigger picture. And I use the word lever. There's multiple levers to be pulled. Well, in the Mahalanobis analysis, those are levers. Mahalanobis says, well, if we do this, this happens. If we do this, this happens. And then it runs the math of if we do this, 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 and this, and this happens. So it gives you the idea of doing a strategy, a global strategy of what can be done. Well, somebody had mentioned in one of those comments the idea of silver being the big winner. Silver, gold, oil are commodities, and they can be tied to a unit, and then that unit can be the asset backing the cash, which would put a floor underneath the problem that we're currently facing. Now, would you say that it's just the US national debt? No, because it's not enough. Is that US national debt plus M1, M2, and M3? Probably not, because that's not enough. Well, if it's M1 and the US national debt, I ran the math, gold would go to 40,000, roughly between 40 and 48,000 an ounce. If you start adding in additional layers of derivatives, it goes from 48 to 80,000 an ounce, just depending on what you're looking at. So if you add in oil, could it be less than that? Absolutely. Here's the underlying point. You don't hear any of this conversation anywhere because nobody's thinking it through. The Chinese and the Russians have thought it through in terms of what they're looking at, but they don't have a reserve currency, so they don't necessarily have to worry about their M1 printing. So the point is to all of this, there's an opportunity here that our government could be taking advantage of, which would be to negotiate the derivatives, the credit default swaps, the credit default obligations, the currency swaps. All of these derivatives could be negotiated away, country to country. If it's not backed by an asset, get it out of the system. I think that's what everybody in our government and across the globe is completely missing. It's not the tariffs. The tariffs are a way to start. But again, I don't know what the government's doing. I don't even know if they're running Mahalanobis. I haven't got a clue what they're up to. But the bottom line is those derivatives have to go. You've got to have balance sheets for global credibility of the United States government. You've got to have a balance sheet that means something. And right now it doesn't. It's just print money to keep the illusion of a standard of living going. You're much better saying, okay, fine. At least I know what my standard of living is, and I know that I can afford it. The problem is the government, as well as a majority of its citizens, are completely clueless as to how to run a balance sheet and not live above their means. So I think there's an opportunity here for the purpose of the globe that should be taken advantage of that nobody's talking about.
You know, I can't help but think that no one's talking about the fact that our suit coat is the same either. People need to wake up, Mitch. And also, there was more additional confusion about the kayaking. I don't know what's with the kayaking today, but here we go. Yes, I do have videos out there of me kayaking and shark fishing on a YouTube channel called Spartan Tackle. I warn you about the music. It's hardcore. This person says, great whites don't like water temperature in the Gulf of Mexico. I don't know about that, buddy. You would think, right? I'm not kayaking with great whites. I mean, here's the thing. I got this picture, though, real quick. It is right behind me. Boom, there's a great white right there. What you guys know about that? Okay. I'm not joking here, guys. I'm not joking here. And at the end of this, I'm not joking either. We're going to pull up some of those questions you guys have been asking because they've been really good. Let's move on to the housing market update. Let me put a chapter on there, 54. Got a lot going on in my head, as you guys can see that. Here we go. Let's start with this article real quick. Let me just go into this camera. So this came out today from Redfin about the housing market. I thought that this was interesting because Florida and Texas has had huge migration, especially Houston, which is where I live. Our migration in Houston has been supporting the housing market and prices a lot more than what I would have thought. I've seen entire Lennar new build communities sell out in 3 months, hundreds of houses in 3 months because of the migration here. But that is starting to change. And don't forget, we also went into a Harvard report on the housing market, how it went in to the fact that immigration was the only thing that was going to grow households. Okay. Obviously, administration is attacking that. That's going away. A lot of things are changing, but this article is interesting. And I'm just going to go over some data real quick, and then I'm going to show you guys what's going on in MLS. But Florida and Texas are gaining residents at a much slower rate than they're used to, eating into home buying demand. Not sure how that would eat into the demand, but I wanted to show you guys the leading metros of declining population growth. Very important. Declining population growth. It's so important. The reason why that's so important is because, remember, the builders develop master plan communities, huge communities, based on population increasing, not slowing down and not decreasing. But the number one leading metro area as far as numeric drop in population is Tampa, Florida at 24,000. Number two, and I got a lot to say about Dallas. Number two is Dallas with a drop of 22,000. And that's 22,000 less, not negative, but 22,000 less. Now, there's a catastrophe going on in Dallas right now with Airbnb. You guys may remember that Airbnbs is essentially against the law in residential neighborhoods in Dallas. So once that video comes out, make it to the Dallas part because I got a lot to say. Number three is Atlanta, Georgia. 4 is my own home metro, Houston, Texas, missing about 18,000 people. They would have, I don't know how many percentage, but there would have been a percentage of these people that would have purchased homes. Miami, Florida also down. So you see there's a trend here, Texas, Florida. Orlando also down. Then Fort Lauderdale. So Melody Wright may win our bet. Melody Wright and I, Mitch, have a bet on what market's going to do worse as far as the housing market, Texas or Florida, and I was leading for, I feel like, a year and a half, but I'm starting to get really worried. And I based mine on like Dallas has outlawed Airbnb and then the new home construction, but obviously Florida is big in that as well. And then we have San Antonio, Fort Worth, and Austin. So a lot of metros there. Let me show you guys purchase demand. Okay, so here's demand in the housing market, which is abysmal. All right, let me show you this. First of all, rates went down. This is really important to understand. So rates went down from 7.04% to 6.62%. You see that orange line? That is a pretty healthy downward trajectory in interest rates. Now, the blue lines on top represents purchase application. It's not closed transactions. It's just the application. So it's purchase application information. So what I want to show you is as the interest rates went down, essentially purchase applications remained unchanged. I mean, they're up a little bit, but I mean, for this massive decrease in interest rates, demand has remained essentially the same for purchasing homes. And the reason that is, we talk about this all the time, is because the price matters and the price is too high when compared to income. Now, I'm going to go into the matrix. Here's the matrix. Okay, I want to show you guys Kingwood. Kingwood is a housing market we've been following on my channel for about 2.5 to 3 years, about 2.5 years. Now, when I first started following, remember the inventory in Kingwood was under 100 active listings. And I'm going to show you what Kingwood is doing. Now, anytime you guys want to customize a search, you go to MLS and you just customize the fields. I'm going to put city location. I'm going to put Kingwood right here. And I'm going to show you guys that it went from under 100 listings to, let me show you the results since it's blocked on the bottom here, 141 listings in the metro area we've been tracking on our channel. This is the highest by far, by like 20% higher than what we've ever covered before. The inventory right now is absolutely exploding, and it's only the beginning of April. So inventory should continue to go up. Now, remember, when you do a city pool, you look at the whole city, but what I do is I categorize the listings by price per square foot. Now, price per square foot is let me just say, a barbaric way to do this. You can do a lot more intimate on the math. But if you're not doing anything for the love of God, just use price per square foot because it's super helpful, but it's not perfect. You understand? So really helpful, not perfect. You still got to walk the property. You still got to do other analysis, but it's pretty good. Now, the cheapest home in Kingwood right now is listed for $106 a square foot. That is a 2009 home. Let's take a look at it and see the condition. And these aren't, the crazy thing here, these aren't beater up houses, like fix me up houses. So the cheapest price per square foot home in Kingwood is super, actually, I remember this house because Mitch, honestly, I looked at this house and I'm like, I may be able to cash flow because the property taxes are low. So I actually thought about, I'm sure it's going to be listed now that we're showing the viewers. It's going to be listed tomorrow, because anytime I list a house on my channel and it's a really good deal, it's like gone in like 2 days. But look at this house. This is a really nice house. You know, it's 2000. Look at the inside. Dang. That's crazy that this is the cheapest house per square foot. So that means the houses that are in crappy shape in Kingwood are competing with this. How are you going to compete with this? Now, remember, you guys, always look at the property taxes. I'm not sure if this is over assessed or not. So it's for sale for $309. It may not be over assessed. Let's just see. So I'm going to, I actually didn't see the assessment. I saw the tax rate was 2.2 though. So let's see if it may be under 309. Let's see if it's under 309. Holy I did not know it was this bad. Okay. I did not know it was this bad. Okay. So, because I never go in, you know, when I'm live and I'm doing MLS analysis, I don't always know what it's going to say. But again, this is for sale for what was it, 307? And look at what it's being taxed on, 381. This is being overtaxed by a minimum of $75,000. That, I'm sorry, yeah, 75. So that means if their tax rate is 3%, they're, or say, yeah, 3%, they're being taxed by, overtaxed by $2,250 a year. So $2,250 a year is being robbed from that family. If you're a politician and you want to understand how the tax fraud works, you don't have to look any further than this. Okay. It's being assessed and valued. Look at assessment year, assessment and taxes, $381,000. And again, it can't even be sold for $309. That's pretty freaking crazy. All that to say, do your homework. Real estate and the housing market is super hyper local, even though every single, in my opinion, housing market is overvalued considerably, like absolutely never before seen before. Horrible bubble that we have right now. Still get hyper local, still do the comp analysis, right? And you guys, I was going to charge $150 for this course. Okay. It's called my market analysis course. I was going to charge $150 a pop for this course. It's that good because I teach you guys how to use the math to find the deal, but I decided to offer it for free. Having said that, if you're a realtor watching this video, I swear you better take that course, because that course is meant for like people like you that have access to MLS. So take the course. It's how to do a market analysis. It's free for you. Mitch Vexler, any comments on the housing market?
The housing inventory, if I was betting, is going to go up another 30% from the numbers that you're talking about, and it's going to do it in the next 12 months. And the reason why I'm saying that is because the amount of inventory that is sitting pending foreclosure, because the banks have refused to touch them. They don't want it. It's poison. So they refuse to foreclose on them. But that in and of itself, across the major municipalities, including Miami, Houston, Dallas, LA, Chicago, are absolutely massive. So the housing inventory is going to go up. Over and above that, fewer people are moving because they're beginning to discover that the grass is not greener on the other side. The real estate taxes take care of that issue right on the spot. When you understand what you're looking at, saying, well, I'm moving from this area, like somebody's moving in from the country into the city, then I hope that they find out what the taxes are before they move. But then they find out what they are if they did move and say, we're out. So either way, the inventory itself is going to go up. Over and above that, you have multifamily inventory that's coming online that they're now offering concessions for. So there's housing pressure, right? So if multifamily inventory comes up, there's lots of places for people to go, and that puts more pressure on the downside for housing inventory. Either way, it's going up.
All right, Mitch, we're going to move on to the Q&A portion of the video. We're going to try to take as many questions as possible, and we're going to try to fire off some answers, although some of them are super complicated. First question, and I'm going to timestamp this as well. All right, so if you guys got, and I got some questions saved, so I'm going to try to get through it as soon as possible. Sir Artorius, first of all, thank you for your support, man. Appreciate that $10. We're going to try to do the best we can to answer this. Good afternoon, gentlemen. Question for Mitch. I wanted to know his thoughts on inverse leveraged stocks as a way to hedge yourself as we enter this bear market. That's an interesting question. What do you think about that?
Okay, it depends what you're doing. So SQQQ, yes, you could do that. That's the QQQ. If you're into options, which is the much better play, it's the much safer play, you can do that based on the volatility of the underlying. So you could do it on QQQ, which is the NASDAQ, and you could say, okay, fine, the market's going down. You could do what's called a super bear, which is you can sell a call spread and buy a put. So there's things that you can do if you're that bearish. Or you could say, I'm interested in an iron condor because today we had a really bad down day. And if you look out in the next 10 days and you think the market's going to average out right where it is, give or take, then you could do an iron condor, $50 wings, either side of it. So it's either side of the market. And you've got a pretty fair chance. So iron condors are delta neutral trades, which means you can collect your money up front and you just sit there and you watch. So you're not positive, you're not negative. You just want it to kind of hover right where it is, but you're taking advantage of the premium in the market due to this type of downdraft. That's the first thing. The second thing is to do it on stocks. I'm not a big fan of stocks at all. I understand the market. So you're better off, in my humble opinion, for what it's worth and do what you want. But stocks are always subject to gyration of, for lack of better phrasing, if the CEO is sleeping with the wrong person, the stock can drop. Okay. That's not having anything to do with business. That has nothing to do with volatility of the underlying. That just has to do with a company's executive board being a bad board or a good board. I don't like that play. There's many more people, trillions of dollars floating in the futures. The futures are a much safer play. The futures themselves have options. The futures themselves also have the minis and the micros. So you could trade M/MGC, which is micro gold. So I think it's $2 a point, very inexpensive, and trade small. So you get the education on how to do it, learn how to read the charts. And then once you understand how to read the charts and you know how to enter and exit, then you can move up the chain into options, but stay in something that's highly, highly liquid. And by the way, you want to talk about something that's face ripping. All you got to do is look at NVIDIA when it came out last night. It took a nosedive straight down and hasn't stopped. So if you were in that stock and you weren't prepared, it would have blown right through your stops. It would have, the volatility would have kicked up. You may have been right on direction, but the volatility kicked up so much, you still would have lost. That's not a good position to be in.
Great answer. Great answer indeed. And again, thank you for the support. And real quick, for the people that don't know who Johnny Fly is, he's just trolling you. Okay, don't react. He's a buddy of the channel. He's just messing around. All right, so everyone chill out. I see the comment sections on Johnny. Johnny. All right, let's go into some comments here. Here's the first one. This is from Wally. Sadly, many people to blame for this recession. Oh, we are in one. That's right. Laziness and greed are top two. I would say fraud is the number one in the form of inflation as well. Happy Wednesday. New Jersey checking in. Yep, I voted for Trump. And to be honest, I love the disruption. So if you wanted high interest rates, remember you wanted high interest rates, and it's going to be painful. And we've been talking about that pain, and the pain is something that we need to go together. But what they're doing is they don't want us to go through it together. They want to lie and hide and just good luck, everyone. Right. But we're saying no. Come together, go back to your fundamentals and principles, save money, only use the math, no emotion. There's no room for emotion right now. Here's one for you, Mitch. And this was from the beginning of the video. I told you I would get back to this an hour later. How would a weaker dollar help manufacturing and exporting?
It's an inverse, right? So if you're an exporter, that means people are going to import your goods. So let's put some theory behind this. If you manufacture an engine and you're in the Grand Bahamas, for lack of a better place, I'm just picking something out of thin air, and the Grand Bahamas wants to import your engine. Let's say it's a Corvette LS7 engine. So they say, okay, fine, our currency is strong. We, the Bahamian government, have a strong currency, which means we can afford an LS7 plus superchargers. So that works to their benefit. However, in our particular case, when we're importing, and we are the biggest economic engine in terms of import, bar none, on the globe. So when we're importing, you want a strong dollar. And part of what you were just saying a few seconds ago, Travis, again, these governments, so high interest rates, low interest rates, it's not that somebody wants a higher interest rate, but if the governments could get together and simply say, we're going to wipe out these derivatives where it's paper chasing paper, think of the clarity that that would give on a global basis. Well, if that's not there, then the implicit risk in the market of those credit default swaps, credit loan obligations, currency swaps, that risk isn't there because the paper itself isn't there. All of a sudden, if that risk is pulled out of the market, you don't have the demand for higher interest rates. It's a bumpy ride to get there. It's a bumpy ride in the thought process. But that opportunity is sitting on the table and nobody's talking about it. That's what's wrong with the system. They can't think straight.
All right, I got a few more. Let's throw this one out. Don't worry, Mitch. I got this one. A little backstory: overthrow the lizard people. So if you're wondering, that's more of a flat earther thing. I've heard that they're controlling the moon. I heard that they're the Rothschild. And the reason why people think that they're a lizard people, well, besides all of the underground ancient civilizations that they're finding, is because of the figurines that they're also finding from ancient civilizations, and they're carved as lizard people. It's very interesting, actually. If you want to go down that rabbit hole, I watched a channel called The Y Files. The Y Files. It's very interesting stuff. Now, Tom says two extra payments towards your principal will cut your loan from a 30-year to a 15-year. I think it's more like 20, but he's thinking the right things, right? A little bit goes a long way. The sooner you do it, the better. So remember that, guys, your mortgage, a little bit extra goes a long way for you and for your family. We want to get you out of this debt prison that you're in. So please do that. Speaking of debt prison, Kelly says we are slaves to the system. Unfortunately, yes. And public school is the daycare. Paper money doesn't work. We need to have tangible money. And that's no knock towards the teachers. I love good teachers. Trust me on that. Okay. Okay, here we go. Oh, this is good. This is good. All right, Mitch, I'm gonna move this one to you. I've seen this comment few times over the last few months. This is from a major person. Also, Travis, please, when you talk about property tax stuff, you haven't been reading our stuff. You wouldn't have said stuff. We need to have taxes for second and third homes and not for primary homes. We can allow the investors to have free houses with no property tax. We cannot have. So, Mitch,
Yeah, I got it.
I've thought of, right. So only no tax for primary residents. You tax the investors. What are your thoughts? Because remember, they pass that on, buddy. They pass that on to the consumer. Remember that.
No, the system is a complete fraud, and it's not even a system. What it is a crime scene. And we've proven this time and time again. If you read the First Amendment to the criminal complaint that I filed with the DOJ, you will be able to follow it through. It's extremely well laid out in a chronological order, and you will see exactly what it is they're doing to all of us. The real estate taxes should not exist. They're not allowed to exist under the 16th Amendment to the U.S. Constitution. Over and above that, under the 5th and 14th Amendment, when you go in to protest your taxes, you're not even able to protest the taxes because we just came out this morning with proof positive from the taxing authority itself stating, oh, well, we're not even looking at use path. We're just simply looking at our budget and say this is the amount of money we need. Well, that's an admission of guilt. So when you understand that that's happening across the United States, the bottom line is that the real estate taxes in their entirety should be repealed across the United States in favor of a uniform states sales tax. That solves the problem. That gives mom and pop back their asset. They will own the land beneath their feet, never again to be paying tax on it. And that means in 30 years from now or 20 years from now, when that mortgage is paid off, they own that asset. When you own the asset, you have no debt. You now have what you can retire on. What has happened today over the last, call it 20 years, is the fact that your equity has been stripped. The reason why you have people living in cars is because their equity has been stripped. The reason why this channel exists right now today is because mom and pop's equity has been stripped and people are tired of it. So either these things are going to change or there's going to be serious civil problems. Because when you steal people's money, you will get what you deserve.
Let's hope so, because a lot of people are hopefully going to reap what they sow. We did lose one person due to the reptilian discussion. I apologize. People love you, Mitch. They just think I'm wacky. But there were some shout outs. If you know Hecklefish, you know what we're talking about, the Y-Files. I think all that stuff's interesting. People think I'm a psychopath for mentioning lizard people, but I didn't say I believed in it. I just was explaining what was happening. A couple things here in addition to that. So funny. And you guys, I want to talk about property taxes so much, but we just made a video about property taxes and an admission of guilt. Don't give them it, Mitch. But we have admission of guilt now. I mean, we literally have put them in a box. There's no way out of the box. If any enforcement agency looks what we have, Mitch leading the way on that, to his credit, we got him. It's case closed. We just need someone to pick up the lawsuit and charge these people. I mean, the math is the math. I just showed you guys a home that was overassessed for $70,000. Property tax is unconstitutional. Property tax makes it to where we're just glorified landlords. And if we're renting our house out, then we're just doing arbitrage because we don't own the house. We don't own the land. So it's really, really messed up. And I had a comment here from Charlton. I haven't seen you in a while, buddy. So when I did the seminar last weekend to teach people how to fight property taxes, the due process is a joke, to his credit. No one knew how to properly fight the property. I mean, I was a little bit heartbroken because I knew that if the students that were in my seminar didn't know, and some of them were very, very smart and were realtors and things, then I knew that normal mom and pop didn't stand a chance, because unfortunately, even though I'm teaching how to fight property taxes and I'm using the math and USPAP, I know that the CADs are not doing that. And so it really sucks. And so what I would recommend each and every person, whether you went to my seminar or have taken our courses, first of all, fight and protest your value. You literally have to do that right now. And when you go to your hearing, show up for the hearing. Do not do the hearing online. Show up. And you guys, please, because you're fighting against people that don't play by the rules, bring your camera and you record the hearing. And if they misbehave or whatever happens, I want you to send me the video, because I will start playing videos of these ARB panels committing fraud and bullying people. I want to create a lot more awareness on how that really works. To Charlton's point, the due process is a joke. We got a super chat, Mitch. I know you probably want to say something. Francisco Valadez, brother, thank you for the support. First and foremost, I appreciate it. He's asking, Mitch, is it better to give a big down payment, or can I pay the principal $100K later? My down payment is about $60K. Francisco, I've done the math on this. So what he's asking, Mitch, is should they do the down payment, or should they close and then pay the money towards the principal? When I do the comparison back to back, if you do the larger down payment and you pay the extra money towards the principal, because if you have a large down payment, your payment goes down. So if you take the difference in payment in addition to the down payment, it's almost identical. And if you think about that, that should blow your mind. So in other words, it's okay if you have a large down payment, but it's also okay if you have a large payment towards your principal after you close. Or preferably, Francisco, you don't want to go broke. Never go broke investing in real estate. But you could do both, right? If you can afford it. So I've done that back to back, but it's almost the same thing, which is, it's actually pretty shocking. You would assume that the higher down payment would be the obvious answer, right? But it's not. It's not at all, actually. It actually makes, in certain situations, more sense to pay the amortization down after you close. Again, Francisco, so if you do a large down payment and you put more money towards principal, whatever the difference is with the less down payment, it's the same thing almost. Absolutely shocking. I've done that breakdown. Did you want to add?
And you can do a third thing, which is obviously on the monthly basis, pay an extra $400 a month, and you will save 17 years off your mortgage.
This is such a great comment. We've listened to, again, we just made this video right now. I mean, like 2 hours ago. Why should I pay the property taxes when I don't have children? Fair point. Let families pay the darn taxes. Not a single or a senior citizen should pay for the education of other people's children. But doctor, I would argue that even if you are paying property taxes towards the school, it's still not going towards the children. It's going towards fraud. But he has a point. What do you say about that, Mitch?
No, Travis, you hit the nail on the head. your taxes are not going to children. When these teachers stand up, because this has happened, we've got it on tape. This happened in Fort Worth, where the Tarrant Appraisal District said, we're going to freeze the taxes. A week later, 13 schools showed up. They all took turns like jets on a runway, lining up saying, well, we're doing this for the children and you must increase the property taxes in perpetuity or we are bankrupt. Well, what's really going on under the hood are investment pools. And we found the documents. We found the balance sheet with notes that says investment pools. Nobody knows what's in those investment pools, how much money is there. These are off balance sheet mechanisms. Over and above that, the school districts have created over $5 trillion worth of fraudulent outstanding school district bond debt. This money isn't going to the children. It is a lie for anybody to say that it is. It is going to cover up the fraud that the school districts have created on a mass scale. That's what the central appraisal districts are doing. So nobody in reality should be paying property taxes, period. They shouldn't exist. They're not allowed to exist under the 16th Amendment to the US Constitution, which says we will tax incomes. It specifically says incomes, not unrealized gains. Unrealized gains is a market value. You are taxed on your market value, which is used to determine the assessed value. The whole thing is a fraud, and it has been a fraud of biblical proportions. It's a Ponzi scheme to the nth degree, and we spelled it out in the First Amendment to the criminal complaint that Pam Bondi has over at the DOJ, which we also uploaded at the request of the SEC. So there are people that are staring at this, but they've got to pull the trigger and call it what it is. One other thing, Travis, you're talking about the protest on the last comment. Those hearings, it's very important that everybody understand, when you go to a protest hearing, that is a public hearing. You can walk in with a witness. You can walk in with a tape recorder. You can walk in with a video recorder. Whatever you do, get it on tape and hold them liable. You can hold ARB members personally liable. If they break the law, you can sue them. You can sue the Central Appraisal District. You can sue the chief appraiser. You can sue the registered professional appraiser who works for the CAD. If they're taking the position to say, well, this is our position at the CAD, and they broke the law, you can sue them. Get it on tape and you can decide what to do later. But it's crucial that you get it on tape. Do not let them walk over you. And by the way, everybody must protest, because if you don't, they will use that against you in the upcoming year. Well, you must have agreed that this is the value because you didn't protest it. So it's not so much how much you pay, but if you don't protest, they're going to come at you constantly. They won't stop. And I know that from personal experience because I've had to file lawsuits for the last several years in a row, which is why we're now at the Fort Worth Court of Appeals, pending possibly going to the Supreme Court. We're going to see shortly.
I mean, you slam dunk case. Here's a good question. I want you to think about this, Mitch, and I apologize to you guys. I'm not saying I'm tired, but I haven't been able to think about this for this video because I have so much going on in front of me. I'm looking at the comments, trying to make sure Mitch is good. So I have a lot going on right here, and I have control. Literally, if I just stick my hand forward, I have controls here, here, here for different cameras. But this is a good question, and this is the question, Mitch. Real estate mindset. What role do you and Mitch play in all this? Because you do play a role. Much love. I'll pass this to you in a second, Mitch, but I would say the role that I hope to be playing in this and I would like to be playing in this is two primary things. Number one primary thing is the awareness part, right? So let me get the truth. Let me get my perspective. Let me help people become aware that a problem exists, because part of the solution is awareness. So number one, I want people to be aware, and I want to talk about the hard things, and I don't just want to sell. I could literally sell millions of dollars of real estate right now. I'm a realtor. I can make a channel and make videos on people contacting me to purchase real estate, and I can get rich. But I'm not doing that because I want people to be aware of what's happening. I lost everything. I had a foreclosure, a bankruptcy, a repo, and a 6-digit tax lien when I was in my early 20s during the global financial crisis. It took me 9 years to crawl my way out of the gutter, and it hurt really, really bad. And I'm in a position now to where I can say my job is to warn people that the same thing that happened to me can happen to you. That's number one. The second thing I hope to do is to help lead people through this. So not just talking, but also leading. You guys know I'm a renter and I've been looking for a house for 3 years. And so part of leading is being transparent. Part of the stuff that we're doing behind the scenes is obviously we're coming up with a second Discord. So we have our free Discord. We're trying to create a second Discord with a small subscription on that so that we can have people hold each other accountable. We have the Empowerment Center already built for you guys. And we have now seminars that we're incorporating with what we're doing. So we're trying to lead by example, and we're trying to bring the community together, because I know that we cannot do this alone, that the only way to solution is most of us have to get together and to do something. So I'm trying to lead you guys. That's how I'm hoping to be involved in all this as far as my role. What about you, Mitch?
I left one country, Canada, over socialist policies. Those wheels are falling off in Canada as we speak. It's taken a long time, but they're out of money. Well, that is, in fact, the exact same position that the United States is now in. They're out of money. Socialism only works as long as you've got somebody else's money. So without boring everybody to death, the bottom line is that no person should have to live in a car, period. And for whatever role and for whatever reason, I'm able to articulate these problems and back them up. It's a big deal to file a criminal complaint with the DOJ. You better know what the hell you're doing, and you better have the evidence. We've got the evidence. We laid it out. We've set mom and pop up across the United States using a blank template that if you've got the evidence, you should be filing criminal complaints. You should join forces with your neighbors and file against these people who have done this civilly, joint and severally liable. You sue them for the damages. And that's separate over and above from protesting your values. So there's multiple things, multiple levers that can and should be pulled. But for whatever reason, I'm able to articulate these problems much better than any economist that I've ever seen and any politician that I've ever seen. And I've offered to debate. Travis would go. We've got multiple people. They can bring all the attorneys they want. I could care less. You want to bring 10 attorneys, you do it. I'll even give you the right to correlate your answers before you open your mouth. No problem. Because they can't get away from the evidence. We've got it. We've enumerated it. It's on my website at mockingbirdproperties.com/DCAT for the world to go and see. No politician can hide from that evidence in any state. Doesn't matter that most of it is coming in Texas. It's the simple fact that they're now having their own admission of guilt. We've got them. We got the evidence. We got the admission of guilt. And over and above all that, I have a 68-page document that I wrote, which is a list of deposition questions for Mr. Don Spencer and Mr. Glenn Hagar. And I guarantee Mr. Don Spencer will be done in the first half of page 1. I don't make these comments lightly. I know what we have. I know the evidence. I know what they've done. Let them stand in front of a judge and tell the judge and the public, this is what we've done. Or lie and say, no, we didn't do it. Oh, no, I didn't understand it. Really? I got your testimony on video. What is it you didn't understand under threat of perjury when you made these statements to the public? Well, properties are going up 30%. There's no math on this planet to back up their mouth. That's what we have. And that's what I look forward to presenting as soon as we can get it in front of a judge.
And that video is coming out as well. I think that's our next video. Man, we have some really good videos coming. I want one more question, Mitch. This is a good question. I saw this actually a couple times in the comment section. This is what Golden Age is saying. I'm just now realizing that their name is Golden Age, so I'm pretty sure you like gold. Maybe you're selling it. Maybe you're not. Maybe you're just buying it. Probably you're selling it. Silver could be bad if the gold standard comes back. Look at what happened to China in the 1970s. Is it possible that if we go to the gold standard that it would be bad for silver?
No. And the reason why I'm saying that, he's right in terms of the history. The problem with the history is the debt load, like what I was saying before in Jimmy Carter's era, was minuscule as compared to where we are right now. It has grown so severely that if the gold standard, or let's call it the commodity standard, which would be my preference, is brought in, silver is going to have to play because there's much more silver than there is gold. It's either that or gold is just going to go, it's going to blow past 80,000 an ounce. So to your point, Travis, somebody's selling it now, you'd be insane to sell it. You're going to have gyrations. You're going to have pullbacks. That's what the market does. But the bottom line is these are major players. So these are sovereign wealth funds. These are governments themselves, the central banks of those governments that are buying these futures up and getting their hands. So if you buy a future, you can sell, you can do all sorts of things in order to take physical possession, but that's what's happening, right? They're absorbing the physical because the problems in the market, people are beginning to see the severe stress, and what they've seen so far, like I said, will make 2007 look like a walk in the park. It'll be an absolute breeze. These problems are severe because the debt kept going. It never stopped. Even in 2007, all that happened with that paper, the credit default swaps, is it got shoved down the toilet of Deutsche Bank. It still exists. It's never been handled. Well, the turkey is going to come home to roost, as they say.
So, and I think they missed your point, and I don't want to speak for you because I think you said the opposite of this. You said don't sell, but
if it was me, I can't tell anybody what to do. If it was me,
yes.
I wouldn't be selling. I
Very
wouldn't
good.
be selling silver. I'd be buying.
P Nice, John, I see you guys. Thank you for joining us. Mitch, let's get him out of here. This has been an hour and a half video. I want you to give any final message to the viewers that you'd like to say, Mitch, and I appreciate you, by the way.
The times that we're in are going to get a lot rougher. I mean, there's no doubt about it. We've talked about the actual amount of people not moving into certain states because they're beginning to realize the grass isn't greener on the other side. And the problem with all this is, and I know Travis keeps saying, well, can people hedge? The bottom line is the best hedge you can do, you got to stand back and look at this, is to get as best you can out of debt. Don't live above your means. And most of these viewers know all this, but it's worth repeating because if you've got children, you have to look at it through their eyes and teach them what's happening around them and why living above your means is never good. And I will even tell you that I know people who are perceived to be wealthy that are living way above their means, and they will be in trouble. If the spouse loses a job, they will lose their house. Just because you live in a big house doesn't necessarily mean that you can afford the maintenance on that house. Therefore, you're living above your means. So this is something that affects everybody, regardless of your strata position in life. And it's going to get worse. We're seeing the numbers, we're seeing it ramp up, and Rome is burning, and the idiot politicians are fiddling.
Yeah, it's pretty depressing and it's pretty sad. Definitely appreciate you guys. Want to remind you everything will be chaptered. Give me about 20 minutes from when this ends because I have to go back and then I have to add the chapters. Happy Wednesday to you guys. I will also link the Empowerment Center in the description of this video, and we're going to get out of here. And Thursday and Friday, we should have some really, really good videos out for you guys. Watch them. Email me if you guys have any questions, although I'm struggling to get to my emails, but I definitely want to see you guys empowering yourself. There's no cost to do that. Follow the links. We love you guys. We can't do this without you. A lot of scary things going on out there. Just use simple math. Nurture the relationships that you have. Budget for the love of all that's holy. And I'm talking about subscriptions, guys. I'm talking about going out to eat. A lot of us could remove some of those costs. And like Mitch said, like what I'm doing with my children, invest in your children. My daughter is 9 years old. I told her when I see her purchasing silver coins, I'm not going to go there with you guys that say don't buy silver coins, that I would help her start her own business. She's 9 years old. I plan on helping my daughter, 9-year-old daughter, start her first business, which is going to be an apparel company. So before I do that, though, I got to teach her what money is. So I'm not going to teach her how to make the money until she understands what money is. That's how I got myself in trouble when I was young and lost everything. I did not respect money. So I'm going to teach her how money works, and then I'm going to teach her how to make it, and then I'm going to teach her how to edit video. So it all goes hand in hand. And I always start with the editing, not the being in front of the camera. It's very important to understand how to edit. Mitch, always a pleasure, sir. Always a pleasure. We've been working hard today. Salute you, sir. Thank you for all you've done for the community. I definitely appreciate that. You guys don't forget to hit like. Nikki, don't forget to email me, and don't forget to hit like, share the video. And obviously, you guys, if you're out there investing in real estate, in your children, in your life, in your spouses, in your budgeting, whatever it is, you guys already know, we wish you luck and we hope you win.